this morning.
No, it's not working,
Almost.
I don't think, Lobo.
We still have a little bit of morning left. It's morning somewhere. What time zone are we in? You know.
Let's go.
All right. So this will really be the sorry, I'm still adjusting the time zones. This will really be the Doug and Ross show. Ignore me. Ignore the man in black. But for entertainment purposes, this should be a particularly fun conversation because we have what could be seen as the prototypical bull and bear scenario up here. Doug is frequently called a perma-bear, and he's not. And Ross is completely the opposite, but he's not. You know, they're both realistic. They know when to buy and when to sell. So it's kind of a false dichotomy. But in a way, it's also very true. When you listen to them talk, everything is always on its way up to the next greatest thing with Ross. And when you listen to Doug, he has advice for what to buy, but everything's about to fall apart and it's going to be even worse than he thinks it's going to be. So a conversation with Doug and Ross. Since it's morning and we can need a pick-me-up, let's start with Ross. And Ross, can you give us the quick version of your macro view and why you're such a bloody optimist?
Well, I'm an optimist partly because I made a ton of money being an optimist.
That's
and
a good
that
answer.
Always works. I'm an optimist because I travel a lot and I see what's happening in the world, and a lot of it is very different than the pundits would have you believe, who don't travel and instead read the same thing and talk to the same people and form their opinion from a very small subset. So I don't really think they know what's going on in the world any more than I do. And at the end of the day, you make an opinion, you form an opinion, you follow your nose, you do things, and if they work, that's the right thing to do. If they don't work, you better do something else. And what I've done in my life is build companies, and some are successful operating companies, and some are trades, where I'll buy something like a resource property in Argentina or Bolivia or anywhere, and add some value to it, and then sell it to somebody who wants it. That's a pretty nice business. It's worked out very, very well for me, many times. It's kind of irrelevant, quite frankly, whether I'm a bull or a bear when you do those kind of things. Because if you can find something that someone else wants to buy at a price more than what you paid for it and you've put into it, that's a good business. And you can do that in any market. And that's why in any market, this market today is for sure a pretty bearish outlook. But prices are a lot lower and you can get a lot better deals, number one. And number two, when you're in a business like ours, whether it's oil and gas or mining, where discovery is an important part of the value proposition, if you discover something, if you spend $1 million drilling for gold and you find a gold deposit worth $50 million, you can sell it for maybe 30 or 40. That's pretty good business. And you can do that in any market, in a bull market or a bear market. So you know, and if you look out there today as investors, it doesn't really matter what my view is on the macro world. There's an awful lot better value today than there was a year ago. So it's a much better day today to buy stocks and make money at them than it was yesterday. Forget about the world. In fact, the more bearish the sentiment, the better the value is, because nobody wants to buy when everyone else is fearful. That's exactly when you want to buy. So I'm looking for good opportunities today to not only invest in companies, but also acquire as properties that I can then hold and develop and sell when the market comes back, as it surely will. And when the bearish mood turns into a bullish mood, that's when I want to be hitting the sell button. And I've done that a lot in the past. I'm going to continue to do it in the future. So I didn't maybe address your question about the macro world, but I will for a second. I mean, I'm still relatively bullish. I'm still relatively bullish. I see growth. And don't forget, this is a metals-driven optimism. This is a resource sector optimism. I don't sell hamburgers, and I don't play the real estate game. I develop mining companies and energy companies to some degree. And if you go to China and you say 6% growth is terrible, well, it's terrible on a much higher base than it was 10 years ago. And actually, that is a resource-consuming country, and at 6%, they're still consuming 45% of the world's copper, 40% of the world's uranium, 60% of the world's coal and iron ore. They're still doing that. And that delivers wonderful, wonderful demand-side growth for my business. And I look on the supply side, all over the world, mines are harder to build, more expensive to build, take longer to build. That's a very bullish outlook. for constrained supply, continuing strong growth in demand. That's a pretty nice scenario for my business. So I'm bullish, and for those reasons.
That's a very good answer. So, Doug, you keep saying that it's going to be worse than you think it's going to be, and yet things haven't blown up yet. And it seems inconceivable that trillion-dollar deficits could be the new normal. But they kind of seem that way. You know, are you wrong, or
No.
can this be a new normal?
Ross and I have been friends for 20, 25 years. I don't know.
Whatever.
30. I don't know. Long time.
We don't have to
long,
disclose
I can't
that.
remember.
And I totally agree with everything Ross said. I mean, he's absolutely correct, both from an academic point of view, and not only, it's not just academic, because he's done all this stuff. I don't know what your Ross is a billionaire. I know you don't want to, or close to it, and he's done it all by following the advice that he's just given you. He's absolutely correct. So it really doesn't matter when you follow that formula, whether the economy is going up or down or sideways. You just basically do what Ross has said. And it's correct. You can't argue with that.
Thank you.
Okay, well, let's go.
You can talk to my bank manager that I have to go and see this afternoon about a loan.
But you know, I mean, there are flies in the ointment. There are problems. There are stumbling blocks along the way. Like, I've always been a huge believer in China, but you know, the thing is that I can see that there are a lot of problems in China, and I think there's an excellent chance that the place could blow up. They have a huge real estate bubble, and the problem is that the average Chinese guy who works hard and produces more than he consumes and saves the difference, what's he generally do with that excess capital that he's created? Well, in China, they tend to do one or two things. Either put the money in the bank or they buy real estate. The problem is this, is that they bought so much real estate that there's a bubble in it. The real estate market could collapse, and all those people that have their capital in real estate lose their money. But it's worse than that, because it's all borrowed money from the banks. I mean, they've deleveraged a little bit, but when the banks collapse, what's the government going to do? It can't have all those people angry because they don't have any yuan anymore, so they'll create more yuan and bail the banks out, and then the yuan that are left lose money. So this could lead to political problems and mobs that go out and destroy a lot of things, and then the consumption of copper goes down. So I like to keep my eye on these things, and Ross does too. And my view of these things that could happen, and I expect likely will happen, in no way invalidates what Ross said. I just think it's something that you gotta keep your eye on.
Any comment on the China comments?
Well, I think in fairness to Doug, he's right in a certain way, but I guess I have to say, if China does really blow up, that's going to really be bad for metal prices. I mean, it will be very, very bad. And that's actually what's happening today is a little bit confusing to me. And I'm not an uber bull, because I do understand there's some cracks in the system. There's obviously cracks in Europe. There's cracks in the U.S. There's cracks in Asia, and because China is such a dominant part of the oil and gas and metals world today, you do really have to watch it carefully. I've followed the proposition that 1.3 billion people, a once-in-a-lifetime move from the village to the city, to manufacturing jobs that are now the world's manufacturing country in the world. The swing factor I see is not so much the property bubble, because I think I can get over that. It's whether they can become their own consumers, whether they have enough capital to become their own consumers. Because until recently, they've been the world's manufacturers. They've manufactured for China, they've manufactured for America, for South America, for Europe, and as their currency appreciates against the dollar, their manufacturing becomes less and less competitive globally. But as their country monetizes, as people in China get richer, they can afford to buy more things built in China. And that's the next leg of demand that will continue to sustain enormous resource consumption, resource metal consumption specifically. So that's the thing I'm looking for mostly, is to see how the Chinese evolve from manufacturing for the world to manufacturing for themselves. And there's this monster opportunity there, which should continue this long super cycle of demand growth in China and the world, should continue it for another 10 or 20 years. It's not going to be infinite, but it should be long term. And that's the thing that has to happen for that to happen. But if China does, I guess I'm not all that worried about the real estate collapsing, because again, China has very little national debt, and in fact has surplus. It has all kinds of dollars parked, trillions of dollars. It still has a current account surplus, so it's still bringing in more dollars all the time. It has a very, very strong fiscal condition relative to almost any other country in the world. So it's got a lot of horsepower to do that which they did a couple of years ago, which was inflate their system by printing dollars, printing renminbi. They could do that again quite easily. I think it would be kind of a quantitative easing in China, and I think they probably will if there is the overheating that has widely been reported in the property market, leading to stress and leading to financial stress on banks in China. I think the government has an awful lot of tools available to moderate that. So I'm not too worried about it, but it is an issue. If you want to really see what's happening in China, though, look at the metal prices. Don't really look at equity prices here, because equity prices here are driven by investor sentiment in North America and Europe. Those are the people who buy our stocks. You have a very bearish mood amongst metal investors today. Companies buying, or people buying all the resource stocks, everything that's here, and all the blue chips as well. The Techs, the Barracks, the Gold Corps, everything's collapsed because people just don't have confidence that these companies will do well. But if you look at the metal prices, which are largely driven, in the case of gold and silver, by people who really want insurance against financial calamity, and those prices are holding up beautifully. And if you look at base metal prices like nickel and copper and aluminum and lead and zinc, they're still trading at very, very good levels. And that's fundamental demand today, driven largely by China. Not entirely, but largely by China. That's pretty healthy to me. Copper is still trading for $3.30 a pound. That's a ridiculously high price just a few years ago. That's what people are paying to get copper, and if there was no demand for copper in China, you wouldn't be seeing those prices. And inventories are falling through the floor. Copper inventories now are about a third what they were a few years ago. So those are very bullish things when you look at the metal price. And so I'm still feeling pretty comfortable about it, but it's got some worries, it's got some cracks. We have to watch it.
Let's talk about copper for just a second. How much speculation is there in that price? If it were to make a technical break below $3 or something like that, would that cascade down to $2.50 or something?
No idea. I have absolutely no idea. I can't comment.
Your bright boys in the back room don't have theories on that?
I don't think so. I don't think so. I really don't know. I don't think there's no ETF in copper the way there is in gold and silver. I mean, there's a little one, but it's not a significant one. There's not a lot of. I don't think there is a lot of copper held by speculative investors anywhere. I just don't think so.
Okay. All right.
What's a pound of new copper today, if you typically to produce?
Right. Global average probably 250 to 270.
All in?
All in. Yep.
And the cash cost is half of that or something?
Cash cost would be about half of that. Yep. Yep. And it's getting higher, right? Because governments are all wanting to have more and more and more, and that increases the costs. And invest, anything you need to do to build a mine today is twice what it was a couple of years ago, including labor, including cement, steel, basic products. All capital costs have gone through the roof in the mining business. That all adds to cost. And it makes a lot of metal deposits not economic today, which perpetuates high prices because it doesn't increase supply. And if you look at copper supply or gold supply, or a lot of metal supply looking over the last 10 years, even though the price has gone up 4 or 5 times, the actual metal consumption, supply hasn't gone up hardly at all, a few percent.
And you guys might remember that, I don't know, 10 or 15 years ago, whatever it was, Ross put together Pan American Silver because he could see that the price of silver was just way too low, gigantic success. And then shortly thereafter, not a few years, he put together Lumina Copper, where he bought up a lot of uneconomic large copper deposits because he thought copper was too low, and that worked into a huge hit. So no, this is all. Let me ask you this, though, Ross. Do you think I mean, copper and silver are your two real babies, but as you look at other metals like nickel, aluminum, zinc, lead, I mean, 3/4 of the periodic table are metals. What do you like? Anything else out there that gets your attention?
I love gold, and I've always been a gold, Doug. Gold is a wonderful metal. It's a wonderful metal in terms of its demand potential, its supply side, and its value as a commodity that small companies can develop successfully and sell or build. It's a great thing for this junior resource market. It's a great metal. Gold has tremendous legs. I love gold, so that's for sure. Nickel. I like nickel. I don't love it. I like it. Its price is good right now. It's at the cost of production right now. It's not going to go down anymore. Most nickel mines are uneconomic at today's level, so it's got good legs, I think. Beyond that, nothing really jumps out. I like uranium. Nothing really jumps out beyond that, Doug, for me, right now.
Let me jump in.
Nothing I'm going to talk about anyway.
Any thoughts on the rare earth metals, which have been a little mania?
Yeah, rare earths. I've never been a fan of rare earths. No, never. They're not rare, and they're not earths either, and it's a very tricky thing to invest in. It's a very small market, and a lot of risk. So I've never been a rare earths fan.
Okay, well. We'll call them lanthanides then.
Yeah, you can call them lanthanides.
And nobody will know what I'm talking about.
Or you can call them yttrium and cerium and lanthanum and
Don't forget thorium.
Like 15 of them, and they're impossible names to pronounce.
Yeah, that's right.
Neodymium.
I'm not being very successful getting you guys to have a good argument or disagree. So let's talk about something you agree. Clearly, you're both contrarians. Doug is the famous contrarian investor. But it's interesting if you listen to what Ross has been saying. He just talked about liking nickel because it's at its cost of production. So that looks closer to a bottom than a top. You talked about Doug mentioned Pan American, and he mentioned aluminum, buying things that were uneconomic. Ross likes to buy things that are uneconomic. Why? That's the contrarian investment. And you also earlier mentioned two sort of hot buttons today: Bolivia and Argentina. We had a panel of Explorers League honorees at our last Cambridge House Pavilion like this, and every single one of them on the panel, I wish you had been there, said, well, I'd rather be in, or were you there? But most of them said, I'd rather be in the Yukon or Quebec or Nevada. I don't want to go to these risky places. But you made a lot of money doing that. Mm-hmm. Presumably that's part of your contrarian nature. Can you speak to that a little bit? Because right now there's a lot of fear,
Yeah.
People are ratcheting up taxes around the world. Mali blew up,
Well, I don't know, I don't know how useful this is going to be to anybody, but I'm a very foolish person. I mean, I'm really stupid. I have more near-death experiences than anybody you know put together. Why? Because I don't think risk. In fact, maybe I even gravitate towards it. So I've worked in just the most hairy, horrible countries in my life. 3 years in Haiti, 3 years in West Africa, right in the middle of wars, Liberia and Sierra Leone, Bolivia, 10 years in Bolivia, everywhere. The worst roads, the worst food, the scariest diseases that I've come across in some places in Africa. I don't know why I'm alive. I really should have been dead 100 times over. I've had all kinds of near-death experiences, including diseases. But when I was young, I'm not young anymore, Louis, and I don't do that anymore. So I generally don't go to Africa. I don't go to jungles. I don't work in the stands. I worked in Russia for 3 years, right in the late 90s, and I got completely blown up there. Although I got my money back, but it was a horrible experience. So I encountered some of the risk, and I lost that reward that I'd been dreaming of there. Now I went to those places because often, of course, as you all know, the higher the risk, the higher the opportunity, right? The greater the reward. The risk-reward ratio is what you have to always keep in mind. If it's low risk, expect low return, because there's not going to be a high reward in low-risk countries, because everybody's there. You go to places where you want to be rewarded for that extra risk you take. And that is very, very true in the resource business. as long as you're working in a project that has no fatal flaws, that has a very, very large size potential, so that if it does work out and you can beat the risks, you do get rewarded for it. And that's really what we're doing in Argentina today. Argentina, there's no question, is a risky country. It also is a beautiful country. Doug's extolled the virtues of Argentina already, which I really like. It's got great food, great wine, beautiful scenery. It's got a relatively educated workforce, but it's a very frustrating, very tedious, very hard place to go. Therefore, very few companies go there. And so there are opportunities. If you get the timing right, and if you get the right opportunity, you can make a lot, especially when things change. Especially. So today, Bolivia. Bolivia's got a Marxist government. This guy's not going to last forever. Mineral deposits last a lot longer than governments. And if you can get your hands on a mineral deposit and secure it,
make a note of that one.
The government will change. Venezuela, same in Venezuela. If I was younger today, I might just zip down to Venezuela, go down to Bolivia and Argentina, and I might try to acquire things that are for sale, that are cheap. Great assets that are cheap. So your risk is high, but your reward is high because you didn't pay very much for them. And then just wait until Chavez dies, Morales gets shot or resigns, and Cristina blows up in Argentina, as surely she will, because the country is unsustainable the way her government is developing its policies. It will blow up. Things will get cheaper there from the standpoint of operating costs. It will be a better place to work in a few years, and that's when you reap the reward of taking the extra risk of going there today. But I will not go to places that I've gone to before that are just no fun, like the stands, and like many places in Africa, like maybe parts of Papua New Guinea and places where you're just asking to have health problems. Everybody I know who's gone to Papua New Guinea to work has ended up with malaria. Some of them cerebral malaria, which is what I got, which is just no fun to have because it's 50% fatal. And so, I'm going to avoid that side of things because life is good, and I like a nice bed when I go to places. I don't like a malarial infested, crappy little hovel that I have to eat dirty water, and it's.
Yeah,
I don't do that anymore.
Been there, done that.
I've been there, done that. But that has been a very successful operating philosophy for me to go to places that other people don't want to go. There really are good opportunities, and there are, Bolivia's a mining country. It does have good deposits. There's a couple companies here that have really good deposits. Nobody loves them today. That's the time to go in, and if you take that extra risk value proposition, you're going to want to buy those companies.
Well, that's something, Doug, you've said in conversations. At some point, a low enough price trumps risk. Can you...
He's not going to agree with me again, is he?
I don't know.
Yeah, no. No, that's one reason why you're my friend, is we really do agree on most things. We agree on everything, I think, basically, except Ross actually believes in global warming. But
I do. It's a fact. It's not a belief. It's a fact. This is unassailable. This is unassailable, by the way.
No, it's completely assailable. It's a myth and a swindle. I mean, this is very funny because Ross is not only a competent geologist, but he's well educated in other areas, and he's well aware of the fact that the Earth's climate has done nothing but change for 4-point-some billion years, and it'll keep changing. But to think, I've got to send you George Carlin's YouTube thing on what he thinks of global warming. He kind of says it all. I don't know if you've seen that or not.
I have not seen George Carlin's, no. I've seen all the other ones you sent me, though.
Well, all you guys, just so I can win the argument, go to YouTube and Google George Carlin global warming or George Carlin environment, and you'll be mightily amused. You do that too, Ross.
Global warming,
unlike the other things I've sent you, you'll be amused by this.
Global warming is not amusing.
No, if it exists, it's a good thing. And if it exists, it's just another cyclical fluctuation.
Okay, so back on contrarianism, Doug. There's a lot of bearish sentiment in the market. Obviously, you see that as a buy signal, but right now people are worried that it can go lower.
Yep.
And what do you tell people, is this, I'm not asking you to call a bottom. I'm asking you what you tell people who sort of get it, but they're afraid.
Well, I'd say most of these, I've said this lots of times, most of these stocks out there, nothing personal to any of the promoters, are basically crappy and are worth zero, or actually have a negative value. But some of them that are competently run, and people is the #1 thing, and Ross is one of the people, are going to do well. It's a volatile market. I think this is a good time to buy good stocks. I'm not saying it's the bottom, but I think we're getting there.
Yeah, yeah, I would agree. I mean, in fact, I don't know, the last, I don't know, we all have lived through lots of bear markets and bull markets, but this particular market, I call it a road bump. I don't call it a bear market, I call it a road bump. There was a big road bump in 2008, 2009. It lasted about 6 months, maybe 8 months, but really 6 months were really wicked. And of course, it resulted in the best buying opportunity of our entire lifetimes. If you'd bought in March, I should say, of 2009, everything went up. Every single thing went up. Even as Doug calls them, the crappy companies here. They're not crappy. They're not. I don't agree with that designation. These are all serious companies trying to create wealth for their shareholders and to some degree management. They're not all doing that, but most of them are. I think there are a tremendous number of serious companies here. But that was just a fabulous opportunity. And in 2009, in March, I think you would have said the world's coming to an end, and it could go lower. And it just was that fabulous, fabulous opportunity. So today, I don't see where the picture's that different. I just don't see why the demand side of metals and energy, with 7 billion people in the world still growing, every country in the world almost is on positive growth, and that's consuming metals, and especially the emerging countries. Forget Europe. Forget Europe. Europe is not a metals consumptive region. It's just irrelevant what's going on there in terms of metal consumption. So you've got all this fear. You've got all these headlines. You've got all this contagion of the banking system. Who cares? It's not really that important in the metals industry and things that are creating metal demand. And you're seeing that in metal prices. And then you've got all the supply side constraints to increase the supply. So I do see continuing strength. And at the same time, you've got companies in Vancouver here and big companies that are just on sale. They're on sale. Pan American Silver is an example. The company's never been in better shape. It's got $800 million in cash and working capital, no debt. It's trading for a $2 billion, two and a bit change market cap. It's ridiculous. We have 8 operating mines. We're making $1.5 million a day in cash flow. It's just free. There's no risk to buying that stock. I bought 300,000 shares myself last week. And that's just an example. There's many, many examples like that among the big companies that pay dividends and just don't have risk. If you go down market, there's even better opportunities. Companies that week before last were trading below cash value, and I know a company that was trading for less than cash and had 5 million ounces of gold reserves and had done a feasibility study and was moving towards production. You don't get any cheaper than that. So this is really a good opportunity to buy right now. It's great. I'm doing it myself.
Any last comments, Doug, from the chairman?
I agree with Ross on almost everything.
Next time I'm getting some fireworks or
including the
something.
last thing he said, but not the thing he said before that. That's the only thing I don't agree with.
Okay, well, thank you very much.